Friday's market wrap up here at Top Gun Options and T3Live.com. Had a great couple days up at the headquarters yesterday in New York, meeting the team, meeting some new folks, really starting to map out the integration of these two phenomenal companies where we're going to provide the best, literally world-class live training and trading out there. Before we get to the shock of the morning, the shock of the day yesterday was essentially the ECB's move with Mario Draghi just literally. It's not even a punch bowl. It's a punch pool. In not only buying assets but cutting rates, just completely out of the blue, out of Mario Draghi. And it's interesting how the market took it. You can take it a couple ways. Well, the fact that Mario Draghi had to do this means that he believes, the ECB believes, that something really bad is going on in Europe. And then you could also look at it as great news that they're pumping all this liquidity into the market. So welcome to Bizarro Market, Euro style, and now welcome to Bizarro Market. Good transition, nice segue. Didn't think I'd use the word segue today, but nice segue to the jobs report this morning. Just there's actually people on Comedy Central, you know, what I call some of the financial networks, that are like, oh, I just don't simply believe this number. Though there's the same people who didn't believe that ridiculous drop in unemployment right in front of the election, which obviously, as we know, but not many people know, I know, was an absolute lie. The Census Bureau came out and admitted that that data was manipulated. And if you Google this information, Google BLS, Bureau of Labor Statistics, comma, Obama supporters, and let me know what you think, because the Bureau has a lot of people who come up with these numbers, donating to the president's campaign back in the day. But anyway, I digress. 142,000. They were looking for 226. Now, if you think that Wall Street's smarter than you, let's take a look at some of these smart people. Goldman Sachs was looking for 240. They were off by 100. Morgan Stanley, 250. Barclays coming in at the lowest at 200. I saw some ones in front of these the other day, but after the ADP number came out, a lot of these were revised. I mean, look at this. Not a one below 100, and we got 142. So now we have people doing the whole, well, I don't believe these numbers, okay? So the futures are actually pairing their losses a little bit, but if the market's thinking, well, this will just put off the Fed. The Fed's leaving, folks. The Fed's out in about a month, maybe 2 months, with their punch bowl. But if the market believes that this is going to delay some rise in interest rates out of Ms. Yellen, they might be right, but that's kind of a guess. I can't wait to get out of Bizarro Market, and I can't wait for interest rates to start to rise, where a jobs report like this that is just awful, I can look up and go, well, the future should be doing this. They're red. Oh, wait, no, these are recovering, and they're going to be green here today. It's just, it's absolutely crazy. The biggest miss in 8 months. That's nuts. So much for our jobless recovery, and I kind of noticed that the Treasury Secretary, the Secretary of Labor, and nobody at the White House really was running out to any podium to tout the jobs numbers like they do with good numbers. But it's going to be interesting, folks. Obviously, you know, when interest rates are high, stocks will die. When interest rates are low, stocks will grow. So obviously that's the concern, is when the Fed starts to raise interest rates, corporate profits and, you know, earnings are going to be under pressure. But with bad data, here we are in Bizarro Market, it actually means good data. Apple still reeling a little bit from their hacking issues. New security features coming out after the celebrity hacking incident, and I also know a lot of individuals who have had hacking incidents recently. The stock's recovering today, pre-market. And I have a bunch of Apple positions on. I agree with Red Dog of being long Apple here, going through the phone launch. Let's pull that up. It's up a little pre-market, I guess, 98 to 82. But again, I have some bullish double verticals on that should take advantage of a nice move to the upside with Apple. This portfolio we're looking at right here is the Urgent Alert model portfolio, up about $2,800 this week. Big move in the XLF for us. Little loss in JP Morgan for the week. Everything else is in the green in this portfolio, including our VIX bullish double vertical that is out to October. Okay, it's up 38%, $375. This is a nice bullish double vertical, nice hedge in the portfolio. I sold 50 of the OCT 13 puts and bought 50 of the OCT12. That's a bull put spread, also known as a credit spread. Taking a little bit of money to do that. So since I am very bullish on volatility popping out to October, I bought 50 of the OCT15 calls and sold 50 of the OCT16 calls. Okay, that's what makes up a bullish double vertical. And this trade works really, really well if you're really, really right. Okay, so we put a nice bullish double vertical on when the vol was cheap, right? When vol's cheap, you buy it. When it's expensive, you sell it. So nice pop, bullish double vertical, a lot of profit. And then what do? When vol's expensive, you sell it. Once vol gets, excuse me, into the upper teens, it doesn't stay there forever. Vol reverts to its mean, right? It's me on a treadmill. I can't do a 10 incline at 10 miles an hour forever. I got to get back to my resting heart rate. So time for a bearish double vertical. So if we see a nice spike, big spike in vol, we'll take some profits on that bullish double vertical, or close it out and then roll inverted and get bearish. So I would still be looking to get long vol here at 12.5. And we talked yesterday in our report up at T3 Live to look at getting long. So again, very fired up for what's going on and getting together and mapping out our strategic plan, our rollout. We should have probably our first live options training webinar, hopefully in a week or so, maybe 2 weeks, as we put the products together. And we're listening to you, right? You're our customer, you're our traders, you're our investors who want to be trained. So we're going to listen to you as well and get a little bit of the answer key to see what you want from the option side of the house. Okay, so I got to run, got to get ready for the opening bell and manage some weekly options positions. Again, that's a nice what's that, a 5% return for 1 week in this model portfolio. So that's annualize that return, and we're looking pretty good. So have a great day, happy hunting. Make sure you hedge, and I'll be back with Monday's market outlook. Have a great weekend. We'll see you.